Hey, what's up guys, John here. New auto loan interest rates are now at the highest point in 23 years, at about 8%.
Car payments are also accelerating towards record levels.
Experts say you can thank rising inflation, interest rates, and supply chain disruptions.
And for used cars, if you have bad credit, you're looking somewhere between 17 and 20%. For good credit, maybe somewhere around 12 to 16%. And for excellent credit, 9 to 11.5%. Rates have skyrocketed. In fact, this means that the average rate on a new car loan has nearly tripled in the last 3 years. It's tripled in the last 3 years. But what if I were to tell you that what is happening, it's almost hard to believe. They're bringing down EV payments to lease an electric vehicle somewhere $59 a month, $100 a month, $120 a month. Whereas if you have a car payment, a used car payment in America is now over $500 a month. And for a new car, it's about $750 a month.
The average monthly payment for a new vehicle is now more than $700 a month and more than $550 a month for a used one.
It's becoming more common for dealers to sell new vehicles that includes a monthly payment of more than $1,000.
What they are doing right now, a lot of these electric vehicle companies are getting bailed out directly from the government, getting tens of billions of dollars. So they can bring their prices to the floor. Like they could sell cars for $3,000, $4,000, $5,000. It doesn't matter to them because they're getting the direct funding.
EV prices are falling.
New EV prices slipped more than 10% last month alone.
The electric car maker has slashed the price of its cars in some major markets after similar price cuts in the US.
Coincidentally, it's coming from the taxpayer. And so what's ultimately happening is the taxpayer is now funding these vehicle companies, these manufacturers, to essentially price out all gas combustion vehicles. This is happening right now. I'm going to show you the facts. I'm going to show you what's going on. I think this is going to be one of the biggest shifts we're ever going to see inside of the auto market. But what's fascinating is where this actually ends up. Please hit the like button. Hit the like button. YouTube will share this content to educate the people about what's going on in America's economy. And if you'd like to fix your credit to position yourself for funding, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for Monday. Take a look at this. So with higher for longer, now look at this chart first. This chart is absolutely skyrocketing. Here's 2008. Here's where we are right now. You can see what happens next. Now look at this. So with higher for longer Fed policy returning, we expect to see even higher car loan and mortgage rates. Meanwhile, the subprime auto delinquency rate is nearly 4% and stands at 2008 levels. Now, the inflation report came out saying that key inflation measure rose 2.8% in March from a year ago, more than expected. So they're signaling that they're not going to be cutting rates anytime soon. In fact, many people are speculating that rates are going to be going up in the short term. I speculated this about 6 months ago, saying there's not going to be a rate cut this year. Chamath Palihapitiya, one of the early employees at Facebook, he just came out a week ago saying the same exact thing. He thinks there's going to be a 75% likelihood that rates are going to be going up this year. So this is, I believe, is what's going to happen. The Fed's preferred inflation gauge just moved the wrong direction. Came out 2 days ago. CNN, Fed might not be done raising interest rates just yet. Now, look at how this all works out. Delinquency rates at the highest level in almost 30 years. And this is for vehicles. The last time this many drivers were delinquent on their auto loans was when the first mobile flip phone entered the market. Now, what I think that they're going to do is they're going to absolutely crash the prices of gas combustion vehicles. They're going to be harder to finance. They're going to be harder to repair. It's just not going to make sense for a lot of people to own these vehicles. And they're going to position electric vehicles as the best solution, not just for the environment, but for your pocketbook. Like, this is going to be the best solution for everybody. And this is what, I'm telling you, this is what is going to be the future. And this is as in October of 1996. That's according to new data from Fitch Rating, examining the percentage of borrowers at least 60 days past due on their loans in 2023 third quarter. Now, if you have bad credit, as I mentioned, 14%, 18%, real bad credit, you're like 21%, right? Now, look at how this all plays out. The average loan to value on a vehicle is 125%, according to Kelley Blue Book. According to Bloomberg, same thing, 125%. Now, if you're buying a $40,000 car, and let's say you're not, going negative 25% on that purchase, with interest rates at 5%, you're looking at $754. At 15%, you're going all the way up to $951. Now, if auto insurance is, let's say, $200 a month, which is very cheap, $200 a month, and you're spending $50 per week in gas, that's $400 combined, you're looking at about $1,350, not including maintenance costs on that vehicle. When you could lease an electric vehicle for $59 or maybe $100 a month, $150 a month. Now look at this. So new prices on a monthly basis for a new car, $726. For a used car, $533, right? Now, surging auto insurance rates squeeze drivers. 22 minutes ago. 2 days ago, surging insurance rates squeezing drivers. So the costs are just going to continue to skyrocket, as well as maintaining these cars is going to get more and more expensive. But look at this. So braking. And by the way, a lot of states throughout America, a lot of countries are doing the same exact thing. Now, Washington State launches new EV incentive of $9,000 per vehicle. 3-year lease for an EV with a $9,000 rebate, $127 a month for a Model 3. $207 a month for a Model Y. Yeah, that's like a cell phone bill. $127 a month for a car, right? Now, what I think is going to happen is I think we're going to see a flood of people buying EVs just out of affordability. And then we're going to slowly start merging to where people are going to say, why do I even need an EV? Why do I need an electric vehicle? It would make more sense to do a ride share. Now, it might sound far-fetched, but give me a second here, because you're going to see that's exactly where this is all going. And the government's going to insure it. So the government they've issued a lot of money to Tesla, some saying $3 billion they just issued. Plus, remember 2008, they issued them a massive, massive bailout. Even you could lease an EV for as low as $56 a month in Washington State. $56 a month, right? Honda, they got $11 billion. Like one day ago in Canada, $11 billion they're getting directly from the government to push forward and allow Honda to manufacture these EVs, because people don't want to buy them. But when, at least at the level on which they want them to buy them. That's why you're seeing EV prices getting slashed at levels in which we haven't seen. That's why Tesla's slashing prices. If there's so much demand, they wouldn't be cutting prices what seems like every month. Now, when you see what they're doing in Canada, what they're doing, in America, Ford gets $9.2 billion to help U.S. catch up with China's EV dominance. You're going to see that all the automakers that are doing EVs are going to get bailouts. They're going to be paid very handsomely to push forward on this transition. And the companies that don't hit certain quotas are going to have a very hard time making it, especially with a financially strapped consumer that doesn't have much money to go out there and buy a $50,000 or $60,000 car, let alone an $80,000 or $100,000 truck or Jeep, right? So you're going to start to see all the car makers moving in this direction, and you're going to see a lot of states issuing massive subsidies for this electric vehicle transition. I mean, look at this, for example, and this is pretty shocking. So EV leasing has surged. It is subsidized by Biden's leasing loophole. Americans opt to lease electric vehicles to tap Biden tax credits. UAW endorses Biden after close of EV-related jobs. Biden administration offers $12 billion to convert auto factories into EV plants. China's building factories. So you get the point, right? What's happening here? Now, and this is all about moving into a advanced climate-friendly transportation network, right? Talking 1.2 billion here, 560 million here, 60 billion here, all about vehicle charging stations. Another 1.5 billion for these charging stations, 1.3 billion for this reduction program, 1.8 billion for Protect Resilience program. All of this is leading us. It's interesting is $7.5 billion for electric vehicle chargers. So far, 0 built, right? So all this money is already allocated. It's already positioned for this. You have to ask yourself, what's going to happen next? So I'm going to tell you what's going to happen next. So I've talked about this lightly about a couple months ago, and it said only 20% of Americans will own a car in 15 years. But then it ties in perfectly with what just happened. So this came out, and as I mentioned this, said nearly no one in the U.S. may own a personal car. Instead, most Americans would hail self-driving electric ride shares to get around, right? Then Yahoo News saying the same thing. More than 80% of Americans can't afford new cars, right? And so when I put this video out, I said 80% of Americans, right? And I put this out January 13th. It's coincidentally a very similar thumbnail, almost same exact 3 days later, right? And same thing. This is actually my thumbnail, and this was my face was kind of pushed out of it. It's actually kind of funny, and then put with his. But you know, same exact title, right? But what ultimately is going to happen is this. So America's biggest universal mobility experiment is taking place. And so what they're doing and how this all ties in with electric vehicles is residents $150 a month. They're getting $150 a month. This is only, and they're allowed to spend it for transportation, right? So they're going to spend it on transportation, but only for Uber and Lyft and renting and transit, e-bikes, electric scooters, things like that. But they cannot be spent on owning and operating a vehicle. So you think about this. What do I think is going to happen? I believe we're going to see a lot less people buying these gas cars. I think we're going to see lenders pulling back in a very big way, lending on these vehicles because they're going to be falling in value. They're going to be harder to own, more expensive to maintain, more expensive just around the board. People are just going to start defaulting, and so the writing is going to be on the wall. Lenders are going to start working a little bit. You know, they're going to find other ways to work inside of this space, but they're not going to be lending like they once were on gas vehicles. We're going to see a lot of government funding flowing into electric vehicles in the next couple of years. Prices are going to be getting to like $29 a month, $59 a month for these electric cars. But then at the end, people are going to say, you know what? Why am I going to spend $59 a month or whatever it may be on this electric car, plus the price of insurance, which might be, you know, $300, $400, $500 a month, because the price of insuring an electric vehicle is radically more expensive than a gas car because the parts are extremely expensive. And so they factor that in with the premiums. And then you start to add everything up, plus the price of charging the car. Why am I going to spend $600, $700, $800 a month? And not even many people are going to be able to even ask themselves that question. They're going to be living through an inflationary, world, right? They're going to be looking to cut costs when they can take Uber or Lyft and they can spend $50, $100 a week and have the flexibility. That's what I think is going to happen. We are going to be moving into this situation where 80% of Americans are going to be losing their cars the next, 5-6 years. And it's going to, in the beginning, it's just going to flow to where EV is going to make the most sense. But at the end, it's going to end up here. What do you think about this entire situation? Drop below. Let's have a conversation about this. I think a lot of people don't want this. And if you're one of those people that do not want this, make sure you have everything, buttoned up, because the world's going to get more expensive. I can promise you inflation is going to get worse. They've talked about this. Interest rates are going to go higher. Everything's going to get a little bit more challenging. So if you are thinking about, the future, as you should be, make sure your credit score is in line with your goals. You have cash in the bank. You have a really, really good business, or you work for a great employer, that you think is going to be around the next couple of years. And position yourself for it, because I believe we're walking into a world of change here in America. What do you think about this entire situation? Let's have a conversation below. If you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for Monday, and I'll catch you next video.